This video is a crash course for young Aussies on the basics of investing. Now, investing simply means putting your savings into something more productive than $100 notes underneath your mattress. Now, there's a million and one different things that you could invest in, but before that, it's really important to understand why we need to invest and what makes a good investment. Now, for why we need to invest, there's two reasons, and the main one is inflation. Inflation simply means that things get more expensive over time. In the last 25 years, Australia has had an average inflation rate of about 2.8%, which has resulted in the cost of living effectively doubling from 2000 to today, to 2025. Now imagine my godparents, bless them, hardworking farmers in the year 2000. They've saved up $10,000, but they are paranoid about the banks, about stock markets, and real estate agents. So they take that money out as cash, they stick it in Milo tins, and they bury it in their backyard. Now, 25 years later, today, they're retired and they go dig that up to spend. And sure enough, there is still $10,000 there, but you can only buy about half as much stuff with it as what they could have in the year 2000 when they initially buried it. And that's the really nasty thing about inflation, is that it's hard to see the effects of, because the number in your bank account doesn't go down, but nevertheless, it is eating away at your savings. You should expect that your cost of living is going to double over the next 25 years, just as it has over the previous 25. So reason number one why it's important to invest is inflation. We want our savings to grow at least at the same rate as inflation, so that when we go to spend that money in future, we can buy as much stuff with it then as what we could right now. But that kind of leads into reason number two, which is ideally, we don't just want to be able to buy the same amount of stuff. We'd like to be able to buy more. We'd like our wealth to grow to such an extent that at some point in the future, we can retire and we can start taking chunks of that investment out to spend on our day-to-day expenses without needing to work and without needing to worry about running out of money. I'm really happy to tell you that with some simple investment decisions and some disciplined money saving, this is a very achievable goal for all Australians. And a big part of that is thanks to compound interest, or the compound effect. Now, I'm going to have another video that goes into great detail on this, which I really recommend that you watch, because it will change the way that you think about money and about saving. But for the absolute basics, it's just important to understand the formula itself, which is the amount of money that you invest multiplied by the growth rate to the power of the number of years that you invest it for. For example, if you invest $1,000 today in an asset that gets an average growth rate of 8%, in 30 years' time, that will be worth a little over $10,000. Now, a key understanding here is that the most important thing in this equation is not the amount of money that you put in. Rather, it's the growth rate and the number of years that you're invested for. Because if you put twice as much money in but only get half the rate of growth, you might intuitively think that the number at the end of the day is going to be roughly the same. But in fact, if you invest $2,000 at a 4% rate of return, over 30 years, that ends up only being worth about $6,500. It's 35% less, even though you put in twice as much money at the start. The same thing goes for the number of years. If you invest $2,000 at an 8% rate of return, but only for 15 years, that ends up being worth a little under $6,400. The key takeaway here is that the best investment is something that consistently returns a high rate of growth over a very long period of time, and that the sooner that you get started investing, the better, even if it's only a small amount of money. Now, there are a few other factors that are important to consider when choosing your investments, and the first one is diversification. Diversification simply means not putting all your eggs in one basket. You want to spread your money out over a variety of different assets, such that if one of them has a really bad time, it doesn't completely destroy your financial plan. Another one is fees. Remember that a small difference in the growth rate can have really big differences on your long-term outcomes. If you're paying 1 or 2% in fees on the investments that you choose, this is going to substantially reduce your long-term financial results. Lastly is simplicity. It's important to choose simple investments if possible, because it takes all the time and stress out of it. It makes it easier to stick with your financial plan and to have a clearer picture of your progress. Now, I know that many people will disagree with me on this, but in my opinion, for the typical Aussie, there is only one asset that meets all of these criteria, and that is index funds. Index funds are a product made up of thousands of stocks in different companies from all around the world. They have incredibly low fees, they are incredibly easy to use, and you can get started with as little as $50. And over the past 30 plus years, they've had an average rate of return of about 9% per year. Now, despite this, overwhelmingly, the most commonly talked about investment in Australia is not index funds, but property. Now, in my opinion, Australia's obsession with the property market is really unhealthy. And the constant barrage from the media about it leads a lot of people to believe that it's the only way to invest. Now, combine that with the absolutely insane prices of Australian property, the unaffordability and inaccessibility of the market, it leaves a lot of young Australians feeling like they're never going to be able to afford a property and grow their wealth and get ahead. And many people are simply giving up on investing before they even get started. Now, don't get me wrong, I don't think that property is a bad investment, but I want to make it absolutely clear to you that it is not the only investment. There is another option, in my opinion, a better option, and that is index funds. And I want to show you how you can use these funds to grow your wealth and achieve your financial goals. Lastly, I want to say that it is really important that you do some of your own research on this stuff. As the saying goes, trust but verify. The content that I put into these videos is based on tons of research that I've done into this stuff, mostly because I'm just a nerd for it. And while it's my goal to provide truthful, accurate, educational information that's as beneficial as possible for Australians, I am not a professional. I'm not a financial advisor. I definitely am opinionated, and I could be wrong. So it's really important to double check things. And on top of that, there are a lot of people and a lot of investments out there that absolutely do not have your best interest in mind. And they will lie and scam and deceive in order to take your money from you. So please be safe out there. Double check things. And if it sounds too good to be true, it almost certainly is. A good rule of thumb is that 10% growth is about as good as it gets for a typical investor. And if anyone is ever guaranteeing you returns of more than 10% per year, it is almost certainly a scam. I hope that this video has given you a better understanding of why it's important to invest and what the factors are that make up a good investment. And if you are one of those people that's worried about the property market and your financial future, I hope that this can give you some confidence that there is a path forward. The next video is going to be a crash course on the index funds themselves, how they work, why they're so good, what's available in Australia, and how you can easily get started using them right now. So definitely go and check that out. There's also a bunch of other videos on the channel about personal finance basics for young Aussies. So if you're interested, subscribe and go and check some of those out.